In the year 1602, a massive merger occurred in the Netherlands. Several smaller trading companies were combined to form the Verenigde Oostindische Compagnie, or the VOC, the Dutch East India Company. It wasn't just a business, it was an economic juggernaut that would change the world forever. At its peak, the VOC was valued at roughly $7.9 trillion in today's money. To put that in perspective, that's more than the combined value of the world's largest companies today. It controlled vast spice trade routes across Asia and maintained a monopoly that made the Dutch Republic the wealthiest nation on earth. The VOC is widely credited with creating the world's first formal stock market. To fund their expensive, long-distance voyages, they invited the public to buy shares. This was a radical idea. Instead of just wealthy kings or merchants, regular citizens could now own a piece of a global shipping operation. Beyond trade, the VOC acted like a sovereign state. The Dutch government granted them the right to build forts, maintain armies, sign treaties, and even declare war. They weren't just merchants, they were a corporate empire operating with the authority of a nation-state. The primary objective was the spice trade, specifically cloves, nutmeg, and make from the East Indies. These spices were worth their weight in gold in Europe. The VOC's ruthless strategy involved controlling the entire supply chain to keep prices artificially high by limiting supply. But this power came at a terrible cost. The company didn't hesitate to use violence to enforce its monopolies. They displaced indigenous populations and enforced their rules through a private military, prioritizing profit margins over human rights in the colonies they occupied. As the 18th century rolled in, the company began to crack. Maintaining a private military, naval fleet, and an entire colonial administrative system was incredibly expensive. The overhead costs started to swallow the profits generated from the spice trade. Corruption became the internal rot that doomed the VOC. Company officials often engaged in private, illegal trading on the side, lining their own pockets while the company suffered. The term vergaan onder corruptie, or perished under corruption, became a popular play on the company's acronym. Simultaneously, competition began to rise. The British East India Company started cutting into the VOC's market share. The Dutch company, burdened by its massive bureaucracy and internal fraud, struggled to adapt to the changing landscape of global trade. By the late 1700s, the company was essentially insolvent. Despite its massive scale, it was deeply in debt. In 1799, the VOC was officially dissolved, and its assets and debts were taken over by the Dutch government. The story of the VOC serves as a stark lesson in corporate history. It shows how massive scale, when paired with a lack of oversight and unchecked power, can lead to inevitable failure. It proved that a company cannot effectively run a government and manage trade simultaneously without succumbing to inefficiency. Ultimately, the VOC reminds us that even the most dominant giants are not permanent. Whether it's a spice trader in the 1600s or a tech giant today, long-term survival depends on transparency, lean operations, and the ability to adapt to a world that never stops changing.